Welcome to Multifamily Insights. I'm your host, John Kasman, and I want to thank you for joining us for another great episode. Now, if you've been enjoying this show, I want you to do me a quick favor and leave us a rating and review. And if you have not done so already, or if this is your first time checking out the show, be sure to hit that subscribe button so you don't miss an episode. We got a great one today. We're going to be talking to Kimberly Radaker Bays. Kim Radaker Bays has been managing and overseeing Exponential Property Group and its associated companies with a focus primarily on multifamily real estate for over 10 years. Now, she has grown Exponential Property Group from 2 employees to more than 170 in that time. Her leadership has helped her complete over 20 transactions where properties were purchased, rehabbed, leased up, and sold or recapitalized to provide capital gains exceeding 100% in 3 years or less to the partnership. Let's welcome to the show, Kimberly Radaker Bays.
Thanks so much for having me on, John. I appreciate it.
Absolutely. Hey, Kim, I went over your bio at a very, very high level. Why don't you take 2 minutes and fill in some of those gaps?
Sure. So spent some time in the retirement planning industry when I got out of college, and then fell into single family a little bit. And after a few years of that, really got into multifamily. So started the first property with 77 units. And like I said, just the 2 employees at the time, and very hands-on in terms of overseeing all of those pieces, and then just kind of grown over time. So over the course of all of that time now, we've had 22 acquisitions, disposed of a lot of those, grown. Every time we can't find a vendor that will do things that we want done in a timely way, we have a tendency to start another business that can support that main core business in that place. So if over time, we've done about 9,500 units, about to cross 10,000 probably here this summer or in the fall. And it's been a wild ride.
That is a lot and great stuff. A couple of things I want to jump into, right? So one, you mentioned that you really started off more in kind of the financial services, retirement planning area, and then got into single family residential before getting more into commercial and kind of building out not just the investment side of it, but also these ancillary businesses that help support the commercial real estate. You mentioned that first deal was 77 units. That's a pretty big deal for a first deal. How did you make that happen?
Well, back 10 years ago, prices were a lot cheaper, so it wasn't quite as daunting a capital raise then as it would probably be now. But put together, we had 6 passive investors and a former business partner and myself. And so didn't have to raise a whole lot of equity on that one, but just kind of started from that piece. We were able to both of us had enough single family experience between rentals and flips to be able to qualify with the loan on the bank. We did have to have one signer. So one of our passive investors helped sign on the loan because we were not yet at that place that we were able to do that on our own. So finding that person is certainly very key. And we were fortunate that they let us self-manage from the very beginning because of the experience that we'd had before and kind of our background. So started the management company at that point and haven't looked back since.
I love it. I love it. So you mentioned that a couple of great things. One, this was again over a decade ago. So at that time, prices weren't exactly where they're at today. But because of your experience flipping and your partner's experience, you were able to come in and do a lot of that yourself. You were able to self-manage it. And you did bring in kind of an LP investor who helped sign on the loan just to make sure the bank was satisfied with all their lending requirements. Did you understand what the lender was looking for as far as those requirements coming into that deal? Or was that something that you had to figure out when you went through that process?
It was definitely sort of expected. Kind of knew that we were going to need net worth that was larger than the loan amount, liquidity of at least 10 to 20% of the loan amount, since it was a pretty heavy value add. So kind of knew in general what to expect as far as the lending requirements. And then, of course, as you actually pick a lender and get further in, you get kind of down to the specifics. But knew more or less that we were definitely going to need to have somebody that was willing to sign along with us at that point, because so much of our net worth and liquidity was all going into the deal, so it wasn't going to be liquid anymore. So that was definitely a piece that we had to plan for.
I think it's important for any new investor to understand, right? You want to know what the lender requirements are. And that's the beauty of commercial versus maybe single family, right? And single family, you kind of had to do your own deals. And typically it's not that bad if you've got the net worth and liquidity and whatnot. But if you are going into commercial, it's not solely on you. You can partner with other people. Maybe their role is bringing the net worth and liquidity requirements that the lender is looking for, or maybe it's the experience. Sometimes they want that person with experience if you're a newer investor, but it really helps to understand what that lender is looking for so you can build that team accordingly. The thing you don't want to happen is you find a great opportunity and you're going in there trying to get this deal done, but you find out that the lender is not comfortable lending to you based on either net worth liquidity, based on experience, or some other factor. So just making sure you understand what that lender is looking for is really key starting out. You mentioned that you were able to self-manage and you never looked back. Talk to me a little bit more about managing your own properties.
Well, property management is not for the faint of heart, for sure. Some of the stories that I could share are pretty crazy in terms of things that we've had come up over the years, but definitely have always self-managed. I really like that I started it small enough and then grew from there to where I've really learned all of the facets of the business. So I've leased apartments, I've gone to court, I've done the various pieces. And so I think it helps gain some respect from your team when you already kind of know what you're doing and are willing to learn and can pitch in where needed. And then, of course, the team now is big, and we've got a ton of experts and a ton of people that do things all the time. And so don't have to be nearly as hands-on anymore. It's always a really nice piece when you grow to the point where you have experts better than yourselves that you're able to hire. And also just people that somebody else gets the phone call in the middle of the night when something goes wrong. That's always a kind of a nice stage once you finally kind of hit that. But I think it really does help the team's morale sort of to know that we have done kind of all of it from the beginning.
Yeah. And you've had kind of explosive growth, right? You talked about starting off with just 2 employees on that 77 unit and then ramping up to where you've got over 170 employees today, thousands of units in the portfolio. I think you said you're about to eclipse 10,000 units there.
10,000 since inception, but we're at a little over 3,000 right now, but we've had about as many as 5,000 at a single time.
So, I mean, that's still a lot of growth over that time period. Was there an inflection point where things really started to ramp up? And if so, what would you attribute that success to be able to really start getting some scale?
I think really the big inflection point was probably right about 4 years ago. There was a large portfolio that was on the market, and we were able to take down that portfolio. And so that really kind of took us from like a little over 2,000 units to over 4,000 units in a single transaction. And so I think that was a huge piece of it. In terms of what it took to kind of get ready for that. We'd had several transactions go full cycle. So I'd already taken a lot of our passive investors, doubled up their money so we had the capital to be able to kind of play in that. Done several transactions, have made great relationships with the brokers, have really worked on the relationships with the brokers is hugely, hugely important because they're going to speak to your credibility and what, how things are and what, how all of those transactions have gone. And so, making sure that you always follow through on the transactions. If you're awarded a deal and then don't close, people are going to know that. And so it's really important to try to find a way to get those things done. I mean, don't ever do a bad deal, but make sure you're doing enough upfront that you don't put yourself in that situation because even right now, that's really, really huge. The lending environment has gotten a little more challenging of late. And so there are some deals that are being awarded and that are then falling apart because people either can't get the equity, can't get the loan, didn't estimate that various things were going to happen. And so we're actually getting calls back from some of these brokers where they've already gone through the whole process and they're like, okay, this fell apart. So oftentimes they're only taking it back to 2 or 3 people that they know that they've transacted with before, that they know that they can count on to get it done because that's what they're really looking for at that point in time. And so sometimes there's even some better buying opportunities where, we got outbid by somebody that went kind of crazy with their numbers, but sometimes you can get it back into the scale where you want it. If those things fall apart, just by really having those relationships, being the trusted source to be able to close those deals. So I think that's a huge piece as you grow, is making sure that you build those relationships.
It's a great insight right there, especially for those investors who are looking to scale up. You've talked about making sure you close when you get awarded a deal, not wanting to do a bad deal necessarily, but, if you've gone through the process, you find a deal you like, close on that so you could build up your reputation. And I think that's really key, particularly where, maybe you're in an environment where your lender is, changing their opinion of what they want to do. And maybe those terms change. And maybe your equity or your capital partners may have a change of heart as far as what they're looking to do. For that person who still wants to do a deal, you found a great opportunity, but one of those equity partners or that debt partner is no longer giving favorable terms, or you just are struggling with it. how do you try to either renegotiate or figure out ways to get creative to make those deals happen, assuming that it is still a good deal?
As long as it's still a good deal. I mean, I think there's a lot of things that you can do. I mean, make sure that you're checking with different lenders. Even if one lender's kind of retrading you, try to build those lending relationships as well. It's a much more comforting thing when you already have loan docs figured out with somebody. They've already seen you perform. So we're fortunate to have a lot of lenders that we've used over and over again. So they understand they got paid back the last time. So they're going to be a little bit more easy to work with, I guess, on future transactions. Equity partners too. I think it's important to not put your eggs all in one basket. So if you're syndicating a deal, like what is traditionally what we do, we have a really large list. There's not every single person on the list doesn't have to invest in every transaction in order to make it work. So that can be super helpful and give some flexibility because you can always just fill in the smaller pieces at the end if you have to. Also maintain some of your own liquidity as you get to a place where you can do that. I mean, obviously when I started out, I wasn't able to do that. So a lot of people starting out can't, but kind of as that's happened, keeping a little bit of your own extra liquidity so that if you're, $500,000 short to close on something or have a little extra cushion, you can have a little time to raise that after the fact if you need to. Or if, a property just gets tight at some point, making sure that you have a little bit of cash. I think that's a really good, solid thing to do for your investors, is to make sure that you can, once you get to that place, that you're cautious with it and make sure that you can help fill some of those gaps when you need to. And I think the other thing, if you're using more of an LP equity structure with a larger single check type provider, make sure that you're building those relationships with multiple people so that you're not just stuck with one person. You've got some backup plans if that one equity investor suddenly doesn't like the deal anymore.
Yeah, I mean, I heard you say 3 things to do, to make sure you have multiple options for funding your deals. 1, talk to multiple lenders. Don't just talk to one and pray they get it done, right? People change, people leave, stuff happens. So have multiple lenders lined up. 2, you want to definitely build your own investor database or have your own network of investors and really get to know these individuals, understand what they're looking for, and put deals in front of them. The 3rd was having some of your own capital liquid. And this may be yourself if you're not in that position. This may be also where you have partners or other team members who can help fill in some of the gaps right there. The thing that kind of keeps coming up in that theme there is relationships. And when you have a deal and you've got 60 days to close or whatever that time frame is, it's a little tight to try to start from scratch with all these people. So you really do need to get in front of this to be establishing relationships and conversations with people before you have this deal and that clock is ticking. How do you kind of keep those relationships ongoing so that when you do have deals and opportunities, you have people lined up that are ready to partner with you?
I think just, our paths cross a lot anymore. So, there's always different events. National Multi-Housing Council is something that we're very active in. So we get to see a lot of the different lenders, equity players, other owners there too, to kind of network with them. Apartment associations are a great way to meet other owners, other management companies, network with some other smaller investors. So I think those are all good things to kind of keep in front of. But I think a lot of it too, once somebody just understands who you are and has gotten to really meet, once you kind of have the face with the name, it's easier to have that relationship.
Great point, sir. I want to go back to kind of the way you've built your business because it's a little different than what many operators do, right? You are pretty much vertically integrated. We've talked about you building out a business unit for different challenges you face. Just walk me through that. What are some of the different businesses that you have right now in this commercial real estate space?
Sure. So, one of them is our construction team. So we actually have our interior renovation team in-house. We've found that there are a ton of great GCs to do exterior siding and roof replacement and all of those pieces, but it's just a very labor intensive piece. I've recently encountered some new ones that I'm going to probably try at some point if we get behind on things that I've gotten some better recommendations, but the times that I've tried to use people on interiors before, it's always just been a challenge. Oftentimes, 8 weeks later, you've got nothing quite done and a whole lot of things kind of halfway. So that was one of the first ones we built. Also, our materials import business. So it was actually our lender on the first 2 properties, likes to take a little bit of credit for giving us the idea to go and import our materials. He's like, yeah, this other guy I've got a loan with put this in on his draw request and his flooring is a lot cheaper. You should do that. So anyway, it was not quite as simple as all that, but we made some trips over to China, have then grown that over time. Really started with the flooring because we needed 200,000 square feet of flooring for our next project. Found some great tile, threw away about $6,000 worth of doorknobs that couldn't reliably open doors. Kind of all of those pieces in learning curve. Eventually found more and more vendors. When tariffs hit, moved some pieces out of China into other markets. And so it's kind of been a growing and evolving business on that side, but has been huge in this day and age with the supply chain issues, honestly. We've now have direct distributorships with Trane and GE and Frigidaire. And so while there were a couple of weeks where we had no refrigerators, and then we got 3 truckloads delivered all in a single day, which made it for some chaos at the warehouse. For the most part, we've been able to keep ahead of things and having that supply chain. And so then that's actually something that we do for our own properties, but that we also do for other people's properties. So we'll walk and get a whole plan together for the unit renovation. And then we have what we call just a kit box. And so every piece that you need to do the renovation for that unit, aside from the flooring that's too heavy to put in there, all comes in one single box. And so that saves all of the time of your guys going back and forth to the shop over and over again for things. Nothing's getting accidentally bumped off a shelf, broken, pushed back to the back of the thing, and nobody finds it until you sell the property 3 years later. Saves a lot of time running back and forth to Home Depot. And so that's been a huge efficiency kind of game-changing thing for us. And that's, like I said, we do that for about 250 or 300 other properties besides our own at this point.
That's great to hear, right? Because you mentioned that you're doing this for other properties as well as your own, and the benefits seem pretty clear, right? You are now pretty much controlling your inventory. You're not hoping Home Depot or Lowe's has a refrigerator in stock, whatever. You're able to control all of that. But I imagine the logistics and the time and the cost are probably pretty intense as well. How do you measure and weigh hey, is this worth investing the time and energy to create this business unit and all the logistics and all the systems and processes that need to surround that without kind of, really pulling your eye off of the main business, right? I think that's most people's challenges. Hey, do I want to go out there and do this other thing, which could also be I don't want to say distraction, but it's something else that you have to build up and kind of get running smoothly. Sure. How did you balance all that in the beginning?
I think team is just hugely important. I mean, so fortunately, I had a partner early on, then, kind of moved on to other things once he had enough money to retire. But
said, thank you, Kim. Right I'm good now. He's I made mine. I'm out now.
So a little more work-life balance than I often have. So, but I think really that's the key is really team. And I think that's something that even on this newest iteration of some of the things that we're starting to expand into, because it's been so hard to get the cabinet doors and stuff. Right at the moment, smaller cabinet shops won't even talk to you. And even if you want full boxes, it's 17 to 20 weeks out, which you oftentimes just don't have time for in a turn. So we're actually working on building a cabinet factory is the next thing. But we've learned kind of in this process to bring in experts and really we've got the entire factory is being designed by experts in that industry that know exactly the most efficient layout and how many people you're going to need for each piece of things. As we've gotten into doing some development now, we brought on a new development director of development that has built numerous restaurants, activity places, some retail, some industrial. So really building on all of those skill sets as well. So really figured out that you sometimes when you're going to do those things, you need to go find the hired gun to try to minimize the learning curve. And oftentimes you can find somebody that you're giving a huge opportunity to, that they're solving your problem by being able to have this vertically integrated business, but you're giving them the opportunity to run a business that they've probably always wanted to, but never had the ability to kind of start. So some cool synergies can be had there too.
I think it's amazing that you've been able to build that with that mindset. I think it's smart too, right? Because you're tapping experts, right? You're leveraging their expertise in that space, and you're able to kind of really support your core business while also being able to expand and almost treat it like an independent business as well. Do you run it like an independent business unit, or is it really all under kind of, the EXPPG brand, or how do you oversee it all?
There are a lot of separate entities with an awful lot of checking accounts and an awful lot of tax returns. So to answer that question. So they are all separate entities, particularly the stuff that we sort of kind of divided into two pieces for the most part, sort of the syndication, private equity, property management. The properties themselves are started all under one umbrella. And that's kind of where I spend at least the bulk of my time. And my husband spends the bulk of his time now on the materials business. We actually have a graphic design and signage business, kind of all of those pieces, and expanding so more of the manufacturing, the logistics and supply chain pieces that all also are available for third parties. So,
and as you built this up, I imagine that there is a number, whether it be unit based or revenue based, where it makes sense to start bringing some of these things in house. If you were talking to kind of a NOA operator or someone else who is at an early stage, or they have some units under their belt, but they're going through some of the similar challenges you faced, at what point would you say, hey, here's where you want to consider bringing this all in-house or starting to source your own materials?
I think sourcing your own materials at this point is a challenge. I think you need quite a few units to really make that make sense. We grew it very slowly over time. And kind of scaled it along with our portfolio. And so I think that worked. And certainly you could do that too, but there is just a lot that goes into that. The shipping rates and things have been chaotic, the supply chain itself. So I think there probably is a little more learning curve there. So I don't know. I don't even know if I started over from scratch again if I do it. I'm very, very thankful I did. And it's fantastic to have. But if I could find a vendor that really worked well in that area, it was a lot of work to build that. I think, construction wise, having your own crews, I think you can save quite a bit, gives you some additional oversight, can kind of work through those areas. And so that really doesn't take a ton of units because you can scale your crew size with the number of units that you have. Oftentimes, I think it gets kind of comfortable around the 1,500 to 2,000 unit mark to really hire an experienced, polished regional manager. But I think a lot of it too is be really honest with yourself about what pieces of the business you are highly skilled for, where your weaknesses are, and then be really honest with yourself too about what parts you love to do and what parts you don't. So, if you really like watching the day-to-day, asset management portions of the property, then doing actually some property management and stuff might be for you. And maybe you want to hire an acquisitions guy to go out and chase deals and have lunches with brokers all day. If you are really strong on the accounting side, maybe that's the piece that you want to outsource more of the HR and, direct oversight on property things. It really just kind of depends on whatever your strengths are. Make sure that you kind of hire first. I think the first pieces I would hire is just whatever pieces you don't enjoy or aren't particularly good at. And then the hardest piece, of course, for any of us that are a bit like me, a smidge of a control freak from time to time. I just recently, last year, learned a lot more about hiring people that do the things that I'm great at really, really well. So kind of getting that full, when you replace yourself even on the things that you're really good at. But it gives a lot more flexibility, a lot more opportunity for kind of vision and growth and those sorts of pieces too, when you get to that point. But
Kim, great feedback there. I want to replay it just because I think it's really powerful if you break down how you were able to scale the advice for someone else. First and foremost, identify what your strengths are, and then where do you need help? Where do you need someone else who is strong? Either hire that person or find someone who can deliver that. So if you're great with accounting, you're great with the books, the underwriting, the numbers, find somebody who can build strong relationships with brokers and bring deals to the table, and figure out what those elements are, whether it be asset management, acquisitions, capital raising, or bringing in equity. Figure out what you can do, and then figure out where you can get someone else to add value in the other spots. And then as you scale and as you grow and build your team, eventually you want to be able to replace yourself a little bit, right? So even the things you enjoy, the things you like doing in the business, you want to find somebody who can do those things, because now you can truly elevate yourself to be more of a CEO type person, get a little bit of your time back, but focus more on the overall operations as opposed to just kind of being in a position of having a job. So really great tips, because I do think a lot of investors are super hands-on, control freaks, want to oversee everything. And the challenge is it usually stunts growth, because you can only do so many things in your business. And many times you become the bottleneck in the business, and something that, we try to work through as well. So we're continuing to revise and work on this ourselves. but I think it's just really great talking points for someone who, went from 2 employees to 170 and, overseeing kind of the massive businesses that you have today. As you kind of look forward and look into the future about where you want to take your business, what's exciting you, or how are you kind of setting your business up to be successful over the next 5 to 10 years?
Well, we're excited to be able to do some development now, but a lot of it really kind of is as we're continuing to build out the cabinet factory, the granite manufacturing, all of those pieces to really make the supply chain even smoother, continue to really refine systems. We've got some software stuff that we've been working on for a bit to try to automate more and more of the functions so that we can use the human talent really in the best ways that we can, and try to automate and make more efficient the pieces that can be. So
I love it. I love it. And Kim, for folks who want to learn a little bit more about you and the companies and what you've got available, your website is expppg.com. That's particularly the investing side, if they want to learn more about the deals you have, but also if they want to learn more about kind of the manufacturing stuff, you've got existmf.com, and investors can go to either one of those websites and learn a little bit more. Anything else in the pipeline, anything that you're working on right now that's really exciting?
We've got the development going on. And then I guess one of my huge passions is we actually have a nonprofit now called Martha's Ranch Foundation. It's to support families impacted by autism. So we have some ranch land that we've purchased between Granbury and Glenrose, and so are starting to build some cabins. And so that's kind of coming along. Hope to be operational here by the end of the year to have some more events and have the families out that we're really trying to serve. So that's a huge push of mine and focus of mine at the moment too.
That's awesome. I'm happy to hear that. We're going to move to a round of insights. You ready?
Okay.
Give me a failure or an apparent failure that sets you up for later success.
I think there was a property that we pushed really hard on renovations and pushed rents really hard right at the very beginning, and didn't have the perfect team at the on-site property. I think on-site team's hugely important, so make sure you're paying attention to that. So occupancy just stayed lower than we would have liked for quite a bit. And really, as soon as we got the team in place, it righted itself immediately. I mean, you got about 20% gain in occupancy, I think, over the course of, a month and a half, if that. So I think those are some of the things. Now I'm a little bit more cautious. Oftentimes we're buying stuff where the rents are horrendously undervalued, but try to understand that in this market, because numbers are a little slimmer, try to be a little more gradual in the approach, so that you don't, maybe it means a little bit longer hold time, but at least you don't get stuck with the lower occupancy if you aren't intending to and don't have budget for it. So we had budget for it. It was actually, we were fortunate, it was still cash flowing even at a scary occupancy number, but it was thinner than we would have liked. And so that's really one of the things that I've learned, is kind of be a little more gradual over those pieces.
Give me a digital or mobile resource you recommend for your business.
Digital or mobile resource? I don't know if it's really, I guess one of the resources for our business, we run on EOS, which is Entrepreneurial Operating System. And so we have the Traction Tool software that definitely helps keep our meetings organized and keeps everybody kind of going in the right direction. So that's definitely made it a lot easier.
Give me the book you've recommended or gifted the most in the last year.
Recommended or gifted the most is definitely Leadership and Self-Deception. I think it is amazing how often we get stuck in our own heads, and really when we choose to look at each other as human, we can find some amazing connections and make those relationships a lot stronger.
All right. What's a daily habit that helps you stay focused on your goals?
I don't know if I have any particular daily habits. I mean, just normal stuff, get up, brush your teeth kind of thing. But I think that, nothing particularly, I guess. I don't know about that one.
All right. Hey, some people don't. So it's good to hear that, like, most people don't necessarily have something all the time. So good to hear that too. All right. What's your number one insight for investing?
I think really to watch your numbers, make sure you're being realistic, particularly in this environment. You can make a spreadsheet say anything you want it to, if you just adjust a couple numbers in there to make sure that you are comfortable with the assumptions that you're going in with, so that you're doing good things for you, your own investment, and then especially if you have other passive investors from that fiduciary perspective.
All right. And you're in DFW. So give me the number one place to grab a bite to eat.
We spend a lot of time at Kirby's in South Lake. That's our favorite happy hour spot. So really great lamb chops.
It is. All right. Excellent. Well, Kim, listen, you gave us a lot of great insights today. You talked about how you really went from being in the finance space to, getting that 77 unit and then growing to over, 10,000 units or you're going to be soon over 10,000 units that you've invested in and kind of overseen, which I think is incredible. And just the way you've built these other businesses that help support the core aspect of what you do, solving problems, figuring out how to source your own materials, and growing the property management side of things right there. Again, for listeners who want to learn more about what you do or connect, they can go to exppg.com or existmf.com. Kim, I just want to thank you again for coming on the show and being a great guest. We look forward to staying in touch and seeing you again soon.
Thanks so much, John. I appreciate it.